Welcome to the WTR Small-Cap Spotlight Podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. On today's special WTR Small-Cap Spotlight Podcast, I'm honored to be joined by Chris Mayo, Head of Primary Markets for the Americas for the London Stock Exchange Group, LSE ticker symbol LSEG. While we routinely discuss U.S. capital markets on this podcast, today we'll delve into London's capital market scene, discuss dual listings, recent private market deals, and interestingly, we'll discuss how the U.S. small and micro-cap equity markets differ from the U.S. markets. Good morning, Chris, and thanks for joining Water Tower Research's podcast audience today.
Thank you very much, Tim. I appreciate the invitation.
Chris, I always ask our guests to provide a 30,000-foot overview of their professional backgrounds before we jump into the podcast itself, so it would be great if you could do so at this juncture, please.
Well, first of all, I'm based in New York City. That's
Right.
often a surprise to people, given I work for the London Stock Exchange. My title is Head of Primary Markets in the Americas. All that means is that I help companies from the Americas, mostly the US and Canada, do IPOs or secondary listings in London. The IPOs are typically for companies in the $50 million to $1 billion valuation range. But for the dual listings, we go quite a bit bigger. So as an example, we've had companies with $14 billion market cap and $25 billion market caps from the US do secondary listings in the UK this year. My background is that I've been in investment banking for a long time. I first moved to the US in 1999, and I work for Solomon Smith Barney and for Citigroup. I've actually spent 17 of the last 26 years in the United States.
That's great. As you and I just connected on a moment ago, yes, fond memories myself of working at Solomon Smith Barney and Citigroup. But now moving on, Chris, what facts about the London capital markets would be most surprising to a U.S. audience?
Well, I'll start with the one thing that's probably not a surprise. London is perennially the number one listing venue in Europe in terms of equity capital raising, and it is that way year in, year out. That's probably not a surprise, and obviously that's the same for this year. But I think probably what is a surprise is over the last 5 years, London has been the number one capital raising venue for equity outside of the US, China, and India. So we think about the really large markets. London is then usually the one that comes after those markets. And it just shows what a large, kind of capital raising venue it is. I think the other thing would surprise people is that is the most international exchange in terms of the proportion of foreign companies that we have listed as a proportion of our issuer base. London is the most international. Also, the investor base in London is much more geographically diversified than the US investor base. So as an example, year to date, the largest London IPO, the largest main market secondary listing, and the largest AIM listing all came from the United States. I think that would be a surprise to people. I think the final thing to say is, you have many years where the US indices have charged ahead. Actually, that's not the case in this year. The UK is 4 to 5%. The FTSE 100 is 4 to 5% ahead of the S&P 500 this year. And when you put it in US dollar terms, it's probably double that. It's probably 8 or 9% ahead of the US the main US indices.
Yeah, most interesting facts, I got to say. So how do the small and micro cap environments in the UK and the US differ? And I'm most interested to know how the LSE attracts US companies to IPO in London.
Well, one of the things I would say to start off is the from a market structure perspective, it's quite different. So the investor base is very different, especially when we look at small and micro caps. In the UK market, there is less bias towards passive, and there's certainly less bias towards retail. So if you look at the small and micro cap investor base for a typical company in the say it's either $250, $500 million of market cap, you will see in the UK, you'll see lots of long only active money as invested in those companies. And you'll see names you recognize, such as Fidelity, BlackRock, Schroders, Aberdeen. Those are the main investors in those kind of companies. And I think that that's very important because it comes to the factors when you come to raise obviously IPO, but then also raise follow-on capital. There is a specific fund manager you can go and see and say, I'm raising capital. Would you like to invest in this follow-on deal? And as a result, you're 2 to 3 more times likely as a microcap listed in the UK to raise follow-on capital than you are as a US listed microcap. Now, I think it's also important to say is the bias of the issuer base is also quite different. So we tend to see more profitable smaller microcaps going public in the UK than you see in the US. So as an example, on NASDAQ as a whole, which includes the mega caps, less than half the companies listed on NASDAQ are actually profitable. Whereas in the UK, on the main market, it's probably about 2/3. And I should have said at the start, I cover both the main market and AIM, which is our growth market. So about 2/3 of the companies listed on the main market are profitable. And on AIM, it's more than half. So if you look at, that compared to NASDAQ, which is less than half, and that it includes the mega caps. If you go to the smaller ends of NASDAQ, it's probably it's much less than that in terms of profitable companies. So we have more profitable companies as that issuer base than the US tends to have. Now, we can also talk about cost. And I think this is probably the first thing that comes up is the cost of going public in the US is very expensive, even for a smaller microcap. It's probably at least 3, maybe 5 times more expensive to go public in the US than it is in the UK. And obviously that's a huge advantage for us. I would also say is we have, and this is something that President Trump has talked about, we only mandate half-yearly reporting instead of quarterly reporting. And certainly the vast majority of smaller microcaps will be reporting half-yearly, not quarterly in the UK. And I think that makes a big difference. I would also say probably the last thing to mention is that from an IPO process perspective, it's much easier to do testing the waters in the UK than it is in the US. So your ability to go in and meet investors before you're even on an IPO roadshow is much enhanced in the UK. You don't have to have a draft registration statement in place. You just need to have a lawyer look at a presentation so you can get feedback on valuation and equity story many times before you go on an IPO roadshow. And really what that means is as a company, you've got optionality. You can almost try before you buy, see if investors are interested. And if they're not, you can go off and look at some other way to raise capital. But I think that's one of the true advantages in the UK. And I think something would be interesting to you as a research provider. The UK still has deal research, and actually Europe does too. So it is standard for there to be a piece of deal research done by by the syndicate banks as part of the IPO process, which is distributed to the institutions before you go on the roadshow, and actually use that piece of research as a way to set price range. So in the UK, 90% of deals plus will price within the initial price range. In the US, that's less than 50%. So there's clearly a big difference in terms of cost, process, investor base, access to follow-on capital, especially around the small and microcap size. I think that's what the most important thing actually that people don't realize. If you're a $1 billion market cap company in the UK, you'll be in the top 300 to 400 in terms of ranking of size. In the US, you would be way outside. You'd probably be outside the top 2,000. In fact, you'll definitely be outside the top 2,000. I should mention that LSEG, who I work for, we actually own Russell. So the Russell 2000 is our product. And as there's lots of companies that will be outside the top 2,000 as a $1 billion company that are listed in the US.
Excellent. I appreciate that level of granularity and thoughtfulness in your answer, because those are huge differences. Moving on, Chris, Fermi America recently completed a dual-listed NASDAQ LSE IPO. What are the advantages of a dual listing, and what does the process look like?
Well, the real advantage of doing a dual listing, and you mentioned Fermi. So as an example, by the way, that was probably the first dual listed simultaneous US UK IPO in about 25 years. Most of the stuff we do is for existing listed companies in the US and Canada. But I think the reason why they did this still illuminates why you would do this as an existing listed company. So they got more than $1 billion of demand internationally for that IPO. It was around 30% of the total demand. They would not have got that as a very, they're building a data center campus in northern Texas. If they hadn't done the London listing, they wouldn't have got nearly the same amount of international demand. So the point is, for existing US listed companies, you can list in London and get access to investors who currently cannot invest in you. So as an example, investors which have a UK mandate they need you to have a UK listing for them to invest in you. Once you add that as a US company, they can invest in you. And so you can add those investors, and that's that's the biggest pool of UK capital, is the ones with the UK mandate. You can add that pool of capital by just adding the best. Essentially, you need to do a prospectus or an admission document if it's saying that is relatively straightforward to do. And the important thing to say is you do not need to change your governance. You do not need to change your accounting. You can the earnings release you put out in the US is acceptable to us. You do not need to reinvent the wheel. So for modest cost and additional compliance and regulatory burden, and it is relatively straightforward to do this, you can get access to a very different pool of capital, which I think is really helpful, especially in these volatile times, to be able to diversify your investor base from that perspective. And so we've seen a number of companies that have looked to do that. Like I said, our largest secondary listing this year was actually International Paper, which added a UK listing. American Axle has already announced that it's going to do a UK listing in Q1 of next year. So this is really a really good way to broaden your investor base at modest cost.
Excellent. So Chris, wrapping up, it would be an incomplete conversation if I don't mention that private market deals have hit the headlines recently, and that would include such deals as Ford Schwab and Goldman Sachs Industry Ventures. So what is LSEG's strategy in this area?
So we've just launched a new platform, which is called the Private Securities Market. The UK government has put some regulatory framework around this, and it's referred to as PICES, and most people are actually familiar with PICES as a framework. And really all we're doing is we want there to be a platform which kind of evens the playing field. A lot of secondary transactions right now, you just do not have access to information. So it's a pretty murky and lacks transparency from a kind of ecosystem perspective. We want to change that. So the PICES regulation puts in a minimum amount of information that you need to provide as a company. And it's important to say it is a company-led platform. So the company is essentially managing the process. Their employees want to get secondary, someone on their cap table wants to get secondary liquidity, we can help them do that. And it's important to say this is open to US companies, it's open to US accredited investors, and it is important to say, in addition to it company-led having minimum information requirements, it also uses our public market auction technology platform. So the price formation should be much better. We've got better information, so, a real technology platform to actually discover price. And it also uses the UK clearing and settlement system, which US ordinary shares can already be cleared and settled through that. So we think this is really going to be a very important platform, because there are so many companies in kind of Series B and later that are looking for secondary market liquidity for their existing investors. We think this will have better quality of information and better technology, and therefore be something that will be compelling to a lot of companies and their investors.
Yeah, I mean, this is a topic that's actually near and dear to me personally. I've been doing a ton of reading. I mean, there's a reason that both J.P. Morgan and Morgan Stanley have both announced just in the past few weeks that they're going to be providing private research. So yeah, I think you're moving in the right direction. So
Yeah, but I think the last thing I would say about that is quite often though, when I have this conversation and then I actually drop in what we can do about IPOs, a lot of companies go, "Oh, you can do an IPO for a $500 million market cap company." I said, "We can do an IPO for a $100 million market cap company and get you institutional investors, which are high quality." And they go, "Oh, actually, maybe we should consider the IPO instead." But the point is that we can be agnostic about which path companies want to use. And if they don't want to go public ultimately ever, that's okay by us too.
sure. No, it's a really interesting topic that I don't think the average investor is aware of is growing very, very quickly. So thanks for joining us today, Chris Mayo, Head of Primary Markets for the Americas for the London Stock Exchange Group, LSE ticker symbol LSEG. This was an interesting conversation. I really appreciate your time today, and I look forward to having you back on the WTR Small Cap Spotlight podcast in 2026. Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight Podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.